What's going on, everybody? In this video, I'm going to be teaching you how I trade the line chart and how I find all of my trading setups. A lot of you notice I switched to pretty much doing my full analysis and everything on the line chart. Before we get into it, I'm going to help you set up the line chart. I prefer the black background with the white line. You can change it to any color you want. But the first thing you want to do is make sure over here you're on the line chart. And then double click the line itself. In style, it'll say line. Price source is close. The type, it's gonna be on simple, which shows all these peaks. But if you switch it to step, it'll make it squared off everywhere. And then I like that better because you can see the support and resistance areas a lot clearer than just the sharp spikes. And then you can change the color here, the thickness of it. I have it on this setting. Other than that, this is what it should look like. I do use RSI as well. So if you want to add the relative strength index, all you would have to do is go to indicators, type in RSI. Right here, it'll say relative strength index. Click it, add it to your chart. Same thing, double click the line. And this is my setting, 14 source close. And if you want to screenshot this, this is the settings as well. But we're not going to look at RSI right now. We're going to get into the line chart. So the reason I trade the line chart is because the line chart is where price actually closes. So it doesn't show you the long wicks to the high or to the low and all the fake moves. This is only where price closed on the chart. So if you're on the 1 hour, price on the 1 hour closed right here. Maybe on the 4 hour, it was a little different, but ultimately what you're looking at is pure price structure. This is where the price action closed. And to me, that's what's important. The wicks to the high, the wicks to the low, none of that stuff matters. The pure structure of where price closes is what matters. So the first thing I do is go to the higher time frame. I'm starting on the daily usually because I'm looking more for like session trades and weekly trades. You can analyze the monthly and weekly and daily and all that, looking for longer term trades. But ultimately, I'm a day trader, so I'm looking, do my analysis from daily to 1 hour and maybe enter on the 15, 30 minute or 1 hour time frame. But I kind of just go to the daily and just kind of look at the price. As you can see, it trended up for a really, really long time. And then it broke out and blew through all these lows here, creating a bearish structure. So right here, if you just drew a trend line, you would see this big bullish trend right here. And then there's also a bullish run like across right here. So as you can see, this was the major trend line, and then this was the minor. So, it's sharp bullish runs here. When it broke out, retest, and then target this zone. This one broke out as well. So now we're in a major bearish trend. Go ahead and delete that. So now we know we're looking for sells only because we're in a bearish trend. So as you can see, major bearish momentum. What I do on the daily really is just getting the idea of, okay, I'm looking for sells, the trend's bearish, and I'll mark up one major support and one major resistance area. So if you look right here, you can see resistance, 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 engulfing candle there, blew through it. And then you can always just turn on the candles just to see. And as you can see, look, resistance, resistance, and then look. On the line chart, you can really tell, but that's major resistance there as well. Price is rejecting down, rejecting down, rejecting down. So you can switch back and forth from candles to line, but ultimately, we're looking at this line chart. And you can change this to any color. I'm going to change this actually to an orange, and we're going to label this as major resistance. And on the coordinates, I'm going to keep it simple, make it just a rounder number. So let's go ahead and lock that in place right there. And then now we're going to find a major support area, which I would call this my major support area right there. We can go back and see if it ever hit over here. So a little bit, we can bring it up just a tad. So on the line chart, you kind of want to just take the average. So as you can see right here, it didn't quite like the line's not quite on the price, and it's not quite on the price here. It's kind of right in between both of them. If we switch to the candles, however, you can see price definitely was wicking that major area. So that's what's good about switching back and forth, just so you can kind of see where the rejection was. So back to the line chart, we know this is a major support area. We're going to label this major support. Okay, let me go ahead and lock this actually. So that's pretty much all I really do on the daily. I know the bullish trend now broke, and I know this is the major resistance, this is the major support. And then I go down to the 4-hour time frame. So as you can see, this was that major resistance, obviously had a lot of rejection. On the daily, it was just wicks, but now you can see price actually did hit it on the line chart and close below. So like I said, switch back to candles, and as you can see, major resistance and then price trending down. And you can see this trend line right here, and that's what we're going to identify next. So go ahead and go back to the line chart, bring out your trend line tool, and just identify this trend right here. So now you can see 1 touch, 2 touch, 3 touch. This 3rd touch is actually the sell signal I sent out last night. Of course, if you're watching this, you know, in the future, it wasn't last night, but I called this trade out and it went about 40 pips in profit, currently about 20 pips, but I can still see this continuing down. And in this video, we'll get into why I took this trade. But now that we're looking at this major area, we want to find our trade in between this resistance and support zone. So what I do is identify the support and resistance structure on this 4-hour time frame. So as you can see here, this was a nice support, and then now we are trading under it. And I'm just going to copy and paste this line, and then you can see here was the next support, broke it. There's your retest. We're going to copy, paste another line. And as you can see, the same thing here as well. So now that we have all our support and resistance identified, and you can get this text box out and identify the structure levels if you want. I recommend for new traders to identify all your structure, like the lower highs and lower lows. So we have a lower high here. So we have lower high. I'm gonna paste a bunch of these. Lower high down. Oops. Lower high. And all of these are technically lower high, so I'm just gonna put them there. And then we also have lower lows. So lower highs, lower lows, that confirms our downtrend. If you haven't watched the video on market structure, you should definitely go check that out so you know exactly what I'm doing right here. But this is just identifying structure. If you have lower lows and lower highs, it confirms your sells are valid. Until you have a higher high and higher lows, we would not want to buy this. But so now we have the structure identified right here. Now we're going to step down to the 1 hour, which is where I get my entries. So on the line chart, you're going to have to adjust it a little bit. So as you can see, this trend line here is now a little off. But if we just go back across here, it's the same thing on the 1 hour. It's just because on the 1 hour, price closed here. On the 4 hour, it was a little below. So same thing though, same setup. You still have these major structure levels. And really the only thing that ever changes is the trend lines. The structure is still the same on this, as you can see. So now we know we're looking for sells. We know it's a bearish structure and we're trending down. We have lower lows, lower highs, all that good stuff. And how we find our entries is going to be our fib levels. So check this out. So this was the last lower high, right, to the lower low. So we're going to take our fibs from the last lower high. We're going to drag it down to this lower low. I'm going to expand it out a little bit so we can see. So as you can see, the structure from here to here, let me bring that up. So there's your lower high, there's your lower low. And as you can see, price perfectly hit this the 70 and 80 fib rather. So this is my prime entry. That's why you see this green fib level. So this is my prime entry on every trade. If we get a 50, 60 pullback, cool, but my prime entry is the 70 and 80. Actually, I'm gonna let y'all screenshot these fib levels here. So I use the 50, 60, 70, 80, 90. The 50 and 60 is just regular pullbacks. The 70 and 80 are green. Those are my entries. I put the 90 as orange because if it gets back to 100, that means it's retesting the high or the low, and you know you're getting kind of worried. You should watch out. Maybe it's gonna make a higher high. And then I use the 1.1 as pretty much my stop loss area because that means it went past the 100 fib level, which means it made a new high or new low, and it probably hits stop loss, and it's probably going to continue the other way. And then I use negative 20%, negative 40%, and negative 60% as my targets. I don't use these as like the fib extensions where you can take trades off them and your reversals and all that. I kind of just use these as targets. That's usually my 2-to-1, 3-to-1, and 4-to-1 risk to reward ratios on my setups. So go ahead and screenshot this and change your fibs to that. But back to this. So this was my prime entry right here. We would have had the 70 fib and 80 fib zone. And if we go to the candles, as you can see, there is rejection, boom, fell down. And you could have took this trade if you entered right on the 70, let's say, went down 85 pips, came back up to about 30 pips in profit over here, and has just continued down ever since. 250 pips there, currently up 175 pips. So that would have been perfect entry. But let's say you didn't get that entry, right? Let's go back to the line chart. So then we had price make another big push down here. We know we're looking for sells. This is our bearish structure. What do? Swing high to swing low here. I'm gonna expand it out. And so right here, it looks like the 60 fib, right? Let's go ahead and box this 70 and 80 in right here. Let's go look at the candles. Bam, perfect entry, 70 fib level. You would got a wick entry. On the line chart, it doesn't look like you would have had an entry, but price did in fact reject from there. And your entry would have been floating above the line chart, which would have looked pretty cool. I love those entries like that. But so there's your second entry. Let's go back to the line chart. As you can see, the same thing. We have our lower lows, lower highs, lower low, and then this recent lower high. This was my entry last night. So let's do the same thing. We go fibs, swing high to swing low because we're looking for sells. Expand it out. We're going to box in the 70 and 80 fib. Go to candles. Almost got there. Didn't quite, but you would have saw the rejection down from the 60. You look to the left and there's structure right here. So this line, there's structure here, obviously, but there's a lot of structure here as well. I probably would have missed my trade here. Price closed below this 60, closed below the 60 again, closed below 60 again. So 4 times we had rejection from the 60 and from this trend line, and this high held right here. I would have took the sell right here after this engulfing candle, or even on this retest of structure here. So on the lower time frame, we could have identified, oops, I'll redraw that in a second, but we could identify this right here. So retest, still held, and continue down. For this trade, I'm still looking for price to make another push down to least retest this support. So I'm looking for sells down to here. And let's see, that's about 85 pips, we'll call it. So that's the trade I'm in right now. As you can see, it's still pushing down. I'm gonna redraw all our fibs. So if you would have took this swing high to this swing low, that was prime entry. But chances are you probably would have drew your fibs from here, which is just, it's about the same thing. It's just gonna play out different levels. You don't wanna just base your trade off of fib levels because it could be the 50, it could be the 60, 70, 80, 90, even retest the high at 100%. What you wanna look for is multiple confirmations of your fib level, your trend line, your structure, all that stuff playing out together. So if it's just one by themselves, you don't take the trade. But when you have multiple confirmations, that's when you take the trade. As you can see, multiple entries all the way down here. The next thing I want to show you is what happens if the trade makes a new high and goes bad. Because this is another good thing about trading pure structure is when it makes a new high, it's super easy to still get in your trades. So clean this up a little bit. That looks pretty good. So what happens, we're gonna just redraw our fibs on this one. Okay. So what happens if this high wouldn't held and it would continued up, right? Let's say it went way up and took out the highs. Now we broke out of the trend line and we made a new high. So now we have a higher high. We would look for a retest. Now this structure that was previously sells will become support. So this is the structure. Instead of retesting it and continuing down like it did, just say this price wasn't here, right? And instead of going down, this engulfing candle came all the way up, blew out the highs, maybe even took out this high here. Let me delete this for you. So maybe even took out the highs here. Now, instead of this becoming a sell zone, this would become our support zone. We took out the highs, made higher highs. Now what we would look for is price to come down from this structure, retest here. Now we're making a higher high and a higher low. Instead of a lower low, price closes here and makes a higher low. Now we take the trade up. So we wouldn't chase it here, just let it go up, let it go up, let it go up, and then let it retest, and you would enter your buy here. Now look at this. So this is the structure, boom, structure broke. And I don't know if y'all see it, but I see this clear as day. What would happen is you would have an inverse head and shoulders perfectly on this trade like this. So that's what it would look like if this broke structure. Obviously we didn't, we're in the sell, we're in profit, but if this made a new high, this would be the retest of the broken structure. So now we have support there. Maybe it's a higher low because we made a higher high, higher low. Now this is our buy zone, take the trade up. You know, maybe we lost, let's say, I don't know, 30, 40, 50 pips maybe. So we lost 50 pips, whatever, take the loss. Now we enter the buy down here. Boom, take it up, maybe 180 pips, maybe 80 pips, whatever it is. Now we're buying, here's 60 pips. So, and you would make up for that loss and then some. And that's the key thing of risk to reward ratios is, and managing account is, if you take an L, all you have to do is know that, okay, now it's going to go the opposite way. So if you're trading pure structure like this, it's super easy to say, okay, stop loss, got hit, but now I'm looking for buys. If you're just trading like some other strategies, I don't know, you might enter a sell, get stopped out, enter another sell, get stopped out, enter another sell, get stopped out, and not really know what you're supposed to be looking for. But when you trade pure structure like this, if it makes a higher high and a higher low, chances are it's going to go up, take the loss, and enter the buy on the retest.